Happy Monday, everybody. It is Monday, June 17th, and we have started trading for the week. My name is Jeffrey Beamer. I'm the senior investment strategist over at ewotrading.com. We got a bunch to go over with you today, starting with our past trades. We got 2 trades to update you on, and then we'll get into some top headlines, a U.S. market update. We'll look ahead at what's upcoming on the radar, and we'll talk about a stock that we are going to watch this week. But let's get right to it with the first of the 2 trades. And we're going to start with Restoration Hardware, which is now called RH. Okay, the symbol is RH also. And we've been in this trade for, our second week. All right. And because they didn't have earnings until last Friday. All right. So you can see here that the result was pretty darn good. It wasn't necessarily great on percentage terms because some of these trades can really get nice return on risk numbers. It was only up 35%, okay, on the earnings report, but the dollar amount was very nice, and that was $1,100 profit on this particular stock. And earnings came out. In fact, we did a little better than that. As you can see, there's a little wick on the bottom, and when the earnings came out in the morning, this thing looked like it was Katie bar the door, so to speak, headed south. So it started to rally a little bit, but we got out with a nice little profit of around $1,100. So that was on a Restoration Hardware. And then the other trade that we had was a strangle on Oracle. Okay. ORCL is the symbol there. And look at this. Oracle had a nice surprise. The stock gapped up over 13% on the report. And this generated a nice over 80%, over an 80% return, and subsequently $566. Now, this is per spread. So some of you would have bigger accounts. Maybe you did 2, 3, or 4 of these on each one, and then you'll have the respective returns. But we did the minimum here, just a single contract for the strangle, both one call, one put, and off we go. So 2 great trades for the week, generating a really nice return. We trade this on a hypothetical $15,000 account. And so, therefore, we had a very nice return on these. So let's kind of keep the trend going and moving forward here. You know, headlines are interesting this week because there is a lot of quiet news outside. Nothing really grabbing, nothing really impactful out there. So we're going to start with essentially the market moving into positive territory this morning. Really, anytime there is a little dip, this is a buying opportunity. The bulls are in control, and we are moving higher. We'll take a look at the charts here in just a moment. Next headline is Chicago Fed. Their Goolsbee calls for essentially the May inflation rate was very good, but they need more data. This is kind of repeating what the chairman said, that they're focused on the data. They're looking at the data. I have had only one rate cut for this year. When we started the year in January, I mentioned it was going to be probably maybe in June. As we got into March, I said not a chance. It'll be December. And that's starting to look more and more as the news comes out from different Fed governors as well as others. You know, some banks have they have up to 3 rate cuts I've seen for some banks, and I just don't know what they're looking at. I think there's going to be one. It might be December. And now my percentage chance of that is even less. I don't know that they're going to do anything for the year. But again, it's all data driven. So the next headline is interesting. It goes over to the energy space. City analysts look to sell energy in Q4. That whole sector has been pulling back, but underneath there's things like fuel inventories hit crack spreads. Okay, you can look that definition up, and are likely signaling a refining slowdown ahead. So what will that do? That'll cause prices to rise. So interesting disparity there between some of the banks and what the industry is looking at. OPEC is even chiming in saying, "Hey, we need to slow down, slow down things here," which is interesting because they are targeting cutting the production restraints and producing more. So that doesn't start till the fall. So we'll see what that has in store for us for the summer. Last headline here that I found significant is we have an S&P 500 rebalance going to occur this Friday. This will occur on market close, and this would be an interesting read. Go ahead and look that headline up because it really deals with some of the size of share of like Apple in the index. I think Apple's going to be cut by 50% of its current value, or not the stock's value, but its percentage of the S&P 500, while others, get a bigger percentage. And this will be an interesting rebalance. And this is cause for sometimes for a little pause or pullback, but we'll talk about that in a minute. Finally, we have a light week for earnings, especially economic news and earnings both. But there are still a couple names out there that we like to watch and like to follow. So we'll get to those here in just a moment. So let's get into the charts and start taking a look at what's going on. We're going to start with the S&P 500 that is represented here by SPY. Look at the day today. We're up almost 1% now on the day as we have broken through. As you can see, we're kind of stepping up here. We gap up, go sideways for a couple days, gap up again, or big move up. This is when I like to put on my Heikin-Ashi candles because it smooths all that noise out. And you can see here, boy, look at this. These candles, no wicks on the bottom. This is representative of a good bull move here. All right. And we look to move higher. Now, bringing back my regular candles here, let me bring in more data because I wanted to show you a target that I have. All right. That I put out a trade idea on the platform that we have. So let me just pull up our Elliott wave pattern. And I have a target of 565 by the end of September. Okay, early October, by October 1st, essentially, is where I kind of put that. But at this pace, we're going to get there early. But that is out in price and time as far as the Elliott wave pattern that is in play here. So we are still kind of looking very bullish. If we bring in some moving averages here real quick, we have we're just trading above the 21 period. That's my short-term moving average. Let me pull this in, bring more data. You can see we traded right down to it and then rallied off of it, and up we go. The same story applies to the Q, except now the Qs are in what's called a wave 3. This has and wave 3 in Elliott wave is the biggest, strongest wave. So interesting that this is now labeled as a 3 because I've got some targets here that really, obviously 500 is going to be the first target here, but it could hit that relatively quickly. And then really in quarter increments, 525 to 550. But there is some Fibonacci calculations that I like to utilize. And let's just kind of take a look here. I'll do a quick down and dirty on this. So the 100% extension on this is up here at 518 to 520. Okay. Now, being an option trader, we want to determine time also. And I would say definitely August to September on that as well. Okay. Up there. So got a $500 target for the end of July, August, but it could get up there to that 525 level then by September, October. But we'll keep an eye out on that. Moving on to the small caps and IWM. Boy, they are really struggling here. they're having a good day today. They're now up 1%, but they traded lower this morning, and they are really being affected, I think by interest rates and really by the inverted yield curve and some other challenges that small caps are facing right now. So we did hit my $200 target last week, and then we traded lower on Friday. And I thought, are we going to trade all the way down to the bottom of the channel, which is around 193? But no, they're having a good day today, at least. So we'll keep an eye on the small caps and see what happens here. Let me put on. Let's see here. I want to put on a 10-period moving average. You can see here the blue line here is my 10-period moving average. And as long as we stay below that, and we have both the 10-period and my 21-period moving averages pointing downwards, that's not a good sign for really any financial instrument. But in this case, it is IWM. All right, jumping over to USO, which is our proxy for crude oil here, having a great day, up almost 2% today, but running up to some potential resistance up here. Let me clean up my chart here a little bit. This is a pretty sharp rally, and I would be weary of really any significant resistance area. Now, I would call this that we're heading up to here around $77 or $77.80 to $79 as intermediate resistance. Okay, it's not a major area of resistance, but it's pretty strong. So we'll see if we can't break through that or not. But what I'm concerned about here is, again, we have this steepness. It's the angle of ascent. Okay, and we'd like to see more of an angle like 45 degrees or so. All right, so when they get this angle here, all right, it is hard to maintain that and sustain it for a long period of time. Now, commodities are a little different. They can get on these runs and really take off. They can have what's called limit days and limit up or limit down. And that is where really, if you're on the wrong side of that market, man, you don't have a prayer unless you're properly hedged. Okay, so we'll keep an eye here. But man, looking really strong on USO right now, which is interesting given the current market for energy and other items. So moving over to the metals real quick, we'll jump over to gold. It's trading now below the 10-period moving average again. We popped above it on Friday, but we're back below it. We're trading below the 10-period, below the 21-period. And down towards the lower end or the bottom of the channel. Now, again, no concern here if you are a gold owner. I mean, really, if it drops below the bottom of the channel, which is right here at around 211, well, then you can hedge yourself or lighten up on your position. But right now, it's just bouncing around in this channel as it continues to digest economic situations around the world. So right now, gold's taking a pause, as well as silver. Silver is down about the same amount. It's down 71 basis points on the day, but it is at a area where this could be a nice potential trade. And what I mean by that is this is where you get a trade ready for both being either a bull or a bear. So how I would do that is really you could use the 10-period moving average here, or you could draw a line in the sand, okay, and say, okay, if it crosses above, okay, I'm going to go long. If it drops below, I'm going to go short. That is really where we're at right now with silver. It's at a good inflection point. It's going to move one way or the other, and it's good to be ready if you want to do a trade on this particular metal. All right, so draw a line in the sand. It could be the 10-period moving average. It could be a line, whatever. If it crosses that to the upside, you go long. If it crosses this area of support down here at 26.42, then you could go short. All right. So that's it for the metals. Now over to the bonds. Boy, what excitement we have going on in the bonds. All right. So bonds were really rallying last week. Rates were dropping, but the problem was this was causing a widening of the inverted yield curve, which we'll see here in just a moment. But today, rates have edged higher a little bit. Bonds are easing. They're coming off their run. Again, notice the steepness of that rally. Very steep move in price, okay, causing bonds to yields to drop, okay? But when we get these types of moves that are really, especially this one right here, above that 45-degree angle, then you could have a pullback. Doesn't mean your rally is over, but you could definitely have an easing or a pullback. And we'll keep an eye on the bonds to see what is happening. See what is happening there. But for today, bonds are down, rates are up just a little bit. Now the short end of the curve, pretty much flat on the day right now. Well, it's down actually a little bit. So down slightly, trading right at the long-term moving average. Look at that. Okay, we have a 161 period moving average acting as some support right here, trading at 81.56 at the moment. But as you can see, this is not down near as much, and this is causing this widening of the yield curve. Let's jump right over there and take a look at this widening. And this is an unintended consequence of what's happening now. The concern here, as we take a look, we're trading at 131 now. You can see in the chart how this is well off. We were flattening for a while up until April, and going into May, we were looking pretty good, getting it, trying to goes from inversion to regular version. There's words like contango and backwardation that we use in the industry. Okay. But now we're back down to 131 basis points. Now you have to realize that if we got down to about 190, 197, that's where regional banks were having some trouble. All right. And we are right now, nobody's talking about this. All right. This is, it's just amazing. Except for the bond traders. And in that community, they are really watching this like a hawk, and they're very concerned about it. Okay. And, as we trade lower, and you get to these lows that you see here in the past, this is a cause for some problems within certain sector. And you can see from last week here, last Monday, we were inverted by 1.05%. Okay. And now we are inverted by 1.31%. That is a pretty steep drop. Okay. And that could continue. That type of move definitely could continue. So we'll keep an eye on that. Now, what it is has helped also with rates kind of easing a little bit is in mortgages. If we take a look at the 30-year, we are below 7%. All right. On average, this is the Mortgage News Daily average, and that is the blue line there. The gold that you see and the gray that you see are weekly averages. Okay, so they updated as of Friday, but you can see the volatility here. Okay, some pretty big moves. And a real estate friend of mine was telling me that home builders are buying down rates into the fives so that people can get into new homes. Now, this causes a problem for home sellers, okay, that they can't really compete like the home builders can. And so we're seeing inventory starting to build in various parts of the country as homeowners still feel that they can pick these top prices that were out there a year ago. And they're finding that, there's no buyers at those premium levels, and they're now having to lower their prices to try to attract buyers with these larger rates that people are having to pay, if you can get a builder to get you a loan at 5 or 5.6%, and you're looking at another house that's being sold on the market, and your mortgage is right at 7%, well, that's a pretty big disparity there, and big enough for someone maybe to, if they can, to opt for a new home build. So very interesting there. So let's move on to looking ahead here a little bit. We have a light economic data week coming up. We have retail sales, month over month retail sales tomorrow, and then initial jobless claims on Thursday. But that's really about it. The list of stocks is getting a little smaller, but there are still some names, okay, that we want to watch. And, especially on Thursday and Friday, okay, Accenture, Kroger, Jabil, Circuits on Thursday. Winnebago is interesting just from consumer level. Are they buying RVs and do they have the cash to do that? Is that where they want to spend their money? And then Friday, we do have CarMax, which is always a potential mover. All right. But what I wanted to do, and notice here, let me jump back to the beginning of this. We had Lennar this morning, and then tomorrow we have KB Home. So we have some home builders that are announcing right now, and folks are really looking at the home builders as well. So with that said, you're going to be a little surprised probably at the stock that we're going to watch this week. And that is because it is in a sector that really is a low margin sector. But man, does this thing move sometimes. And this is Kroger. All right. KR is the symbol here. All right. And we are looking, this is the stock that we're going to watch. And we are going to trade a strangle on this. We're getting some good value on the strangle compared to what it, notice we're right about the same price that we were on the last earnings event, which was back in early March. And you can see on the chart, there's a little green triangle up there that has an E in the middle of it. That was earnings. Okay. And you can see that this popped up higher over 10% and went into the profit zone. And so we're looking to repeat that either to the upside or the downside on Kroger. Interesting, between the acquisitions and the strategic moves that the company is making, this could show a little volatility. So we're going to watch this for this week. We're doing a little strangle on this. It's just simply buying a call, buying a put. They're different strikes, but the same expiration date. Now, if you have traded this before and haven't had success, we've had great success with these strategies here on our show. As I showed you at the beginning of the show with Restoration Hardware and Oracle. But I have a free guide that I can give you that shows you our process and our strategy for trading around earnings. And that's available at ewotrader.com/straddle. It's free. Just go there and download it. And you can see how to turn this strategy that is basic, but some people do struggle with it, and how we trade it to generate really nice returns around earnings event. So hopefully you enjoyed the show today. Please like and subscribe. We do this every Monday. Have a great trading week, and we will see you next week. Take care.